Welcome to the Advanced Freelancing Podcast. Every week, you'll hear strategies for building your online service-based business your way. And now, here's your host, veteran freelancer, author, and TEDx speaker, Laura Briggs.
Freelancer, independent contractor, employee, how do you know what is the right fit for you? In today's episode, I'm going to be talking about some of the important differences when you're applying for a job between being an independent contractor and being an employee. These are really important to understand so that you can direct your job application search to both or to one if you have a preference for it than another. So first, let's start with why this is so important, because legally, there are certain things that an employer cannot do when it comes to an independent contractor. Employers have much more say over what the working life of an employee looks like, and employees are protected by all kinds of different things like labor laws and can file for workers' compensation and are entitled to different things as part of their overall package, right? So in this episode, I'm going to talk a little bit more about it, but a disclaimer first, I'm not an attorney, so always discuss with your lawyer if you are concerned about whether or not a situation you're already in is violating the rules of independent contractors. One of the reasons that this is so important to define is because employers can be on the hook if they wrongfully misclassify someone as an independent contractor, but treat them as an employee. So when you are being treated as an employee but paid as an independent contractor, you get none of the protections of being a typical employee, and you take on all of the risks and outside things of being an independent contractor. So in general, the IRS has very specific rules about what constitutes a working relationship and how you should be classified. So always take a look at a position's description or what you're actually doing on the job and compare it with those different factors. This overview is designed to give you some knowledge about some of the major ways that these things are different. So the first is how the work is done. An independent contractor has the right to do the work on their time at their discretion in whatever way they see fit. They are responsible for, in most cases, turning in a deliverable, but they are working on their own time. So it could be 2 o'clock in the morning, 6 o'clock at night. They make the decision about when they are going to complete the work. You can see how this is different from an employee where you're being told by your boss you need to show up at 10 a.m. Your shift is from 10 until 3. The employer is controlling the working relationship there. And if that is consistent with how things are scheduled, then it may be more of an employee situation. Employees also equipment to do their job from their employer. At least they could be entitled to it. Whereas an independent contractor or freelancer is working on their own and is 90% of the time providing their own equipment. They're doing things on their own computer, they're using their own printer, they're using their cell phone as the way to run their business, things like that. In an employer-employee situation, the employer should provide you with most of the materials to do your job, or you should have come to your own agreement about that. So those are some of the most important things. Where this can go awry is if you have been hired on as an independent contractor, but the company is forcing you to be online at certain times or acting like you need to be on call. That's where it gets into this really weird gray area of, have you been misclassified? Are they treating you like an employee but not giving you any of the protections? So the next big difference between freelancing and employee status has to do with benefits. So employers will provide things like disability insurance, life insurance policies, healthcare, paid time off, and other benefits to employees. These are most of the time not provided to independent contractors. They don't accumulate paid time off. They don't get sick days. None of those traditional benefits that salaried employees are getting will carry over to an independent contractor. Now, that's in addition to the fact that certain workforce protections like labor laws and workers' compensation insurance coverage for injuries on the job, those apply to employees and not to independent contractors. So you can see the reasons that a company might want to turn to an independent contractor because they are paid by retainer, by the hour, or on a project basis. So a company might not have a need to hire an employee for the long term, but they may have a 3 to 6 month need to leverage an independent contractor. Or maybe the work they need done only requires 5 hours a week, and it doesn't make sense to try to hire somebody part-time as an employee when they could just hire a freelancer to do the same. Now, perhaps the most important difference for you, if you choose to go the independent contractor route, is that you are going to pay taxes out of the total amount of money that the company pays to you. So as an employee, you're on W-2 status. That means you'll get a W-2 at the end of the year that will tell you how much you made, how much was withheld for Social Security and Medicare, how much was withheld for state or federal income tax. You will also determine that amount based on your exemptions and dependents and whether you want any extra withholding when you first start a job as an employee. You will fill out the paperwork to kind of say, this is what I want it to look like. Independent contractors are instead sent 1099s at the end of the year with the total amount that you were paid out. So this is why it's so important to know this. Let's say that you were on a salaried position where you got paid $30,000 base salary. So that's before taxes. So, I'm just going to make up a number here. This is not accurate for tax purposes. But let's say you get your W-2 and it says that you were paid total $25,000. The other $5,000 was, taken care of when the employer paid those taxes on your behalf before putting the money in your bank account or in your check. So you need to report personal income of $25,000 from that employer, and you would turn in the W-2 that has the details on it to back you up. So your income tax bracket will be affected by the amount that you were actually paid from the company after all other things were taken into account. And of course, that's what you use to determine filing your taxes that year if you're going to get money back or if you owe money. Most people on employee status will either owe a little bit or they will get money back. When you are an independent contractor, if the company paid you $30,000 as your, base amount or your retainer amount for the entire year, or that's the accumulation of all the hours that you worked, not all of that $30,000 is your income. It's not even all your business's income because you haven't paid taxes out of that. So you still have to pay the self-employment tax, which covers things like Social Security and Medicare, and you will have to figure out what portion of that $30,000 you can deduct from as far as deductible expenses. So deductible expenses can include things like the percentage of your internet that you used for business purposes. If you're a freelancer, independent contractor, you are a business owner. It could be the percentage of your home that your home office represents and how that's reflected in the same percentage of utility costs or mortgage and rent costs. It can include things like online courses you had to pay for, software, website hosting fees, and other things that you need to have to be able to run your business consistently. So you might take on a contract thinking, wow, that $30,000 is great. I get to work on my own schedule. But you've got to remember, you are not keeping all of that $30,000. Some of it will go to business expenses. And of course, you've got to pay the tax man at the end of the year. This is why setting your rates as an independent contractor is so important, because $30 an hour is not truly $30 an hour that you're bringing in. It is the gross amount that you are making, but it is not the net once you have considered those things like expenses and taxes. This is really problematic for military spouses who step into an independent contractor role and don't realize this until the end of the year, or they took on an hourly rate amount that seemed fair, but in hindsight, it doesn't give them enough of a margin to pay things out like the self-employment tax and their expenses. So this is a huge, huge difference between employee and independent contractor status. Most independent contractors will have multiple clients. So that means you have to keep track of all of the earnings from every client, collect all of those 1099s at the end of the year, and hand it over to your accountant and say, here's all of my income. Here's all of my total of expenses. Let me know how much I owe to the government at the end. And if you make the mistake that I did, which is in not realizing how all of this affects your tax situation, particularly when you're married to someone in the military who is very much on a W-2 consistent salary situation, has a good picture of what taxes will look like at the end of the year, you could be in for an unpleasant surprise of a big tax bill. Independent contractors are supposed to pay their taxes on a quarterly basis, meaning that you estimate what you might owe from the income that you have generated during that quarter. And then you're supposed to send in a check to the IRS. A lot of independent contractors don't know to do this or don't know how to do this in their first year. And that's when totaling all that information up and finding you have a big tax bill is a really unwelcome surprise. I strongly recommend, if you're an independent contractor, do a couple of things. Check out online calculators where you can see what your take home would be, factoring in things like expenses or your anticipated tax rate. And really be mindful of that when you are taking on positions as an independent contractor. $15 an hour suddenly doesn't look so good as an entry-level rate when you discover that it's really more like $10 or $11 once you account for all of the taxes or other things within your business. So this can help you price yourself effectively and also prevent big tax bills at the end of the year. So do that auditing on a quarterly basis, just so you have an idea. You can pay it at the end of the year, but the IRS knows how much harder it is for people to generate those 4 payments all together at once with annual tax filing. So you can always overpay your estimated taxes, and then you will be due a refund, or at the very least, you make a big dent inside what you are going to owe for the year. Businesses ebb and change from one year to another, so your accountant will probably base next year's quarterly estimated taxes on what you make this year. So if your situation looks different, like if you make much less money or you make much more, you'll need to make adjustments in your quarterly estimated tax payments. And of course, I'm not a CPA or an accountant. I strongly recommend that you hire someone who does have these skill sets, because they will be able to point you in the right direction with how much you should withhold. Now, a general rule of thumb for new independent contractors is to set aside 30% of your gross income for taxes. The idea being that you put this into a separate account, and when it's time to pay those estimated taxes or your annual taxes, you are pulling it out from that account. 30% is pretty high, but you do want to overestimate on this so that you don't have that, situation of your spouse was entitled to a refund, but you didn't pay enough in taxes, so that has fully wiped out any refund. You also don't want to have a big bill that's coming in from the state revenue agency or the IRS. Now, if your employer has misclassified you as an independent contractor, you do have legal rights. I strongly recommend broaching this conversation first. Some companies do not realize that they have done this or that it is illegal. Others are intentionally doing this to try to take advantage of the fact that in the big picture, freelancers can be cheaper to use because they don't have to take on things like health insurance premiums, life insurance premiums, all of those other benefits that they're providing to traditional employees. This does expose employers to lawsuits, however. We've seen this in the last couple of years with things like there have been lawsuits with Uber and Lyft. Those drivers are independent contractors. Some of them have argued, hey, the way the company is treating us is more like employees, and we should get all the benefits of being employees. This has also happened to independent contractor 18-wheeler truck drivers who say, hey, I'm allegedly an independent contractor, but it feels more like my company is treating me like an employee. So these issues are hot button issues that are in the courts. They are up for discussion. It is wise to educate yourself about them and to know when you are being taken advantage of. If a company is trying to take advantage of you, you do need to speak up. And if it escalates to the point where you really should have been paid and treated as an employee, you have grounds for a lawsuit and could speak to an employment lawyer about that. Unfortunately, what I have seen in the last couple of years is that there are some companies that have popped up. I don't want to say targeting military spouses, but in a sense, they are targeting military spouses, and they're paying really low rates and paying it as independent contractors, but they are making the military spouses who are hired essentially sit online all day, stick to a very clear schedule, do the work as it is dictated by the employer, things that kind of make it feel more like an employee situation. So be aware of that. You don't want to be taken advantage of. Some of these companies are counting on lack of awareness or knowledge about these complex issues as a way to, make it easier for them to pay lower rates. So they're counting on people not knowing. Educate yourself. Always go through those IRS factors. Check out what is matching up with how you are able to do the job. You should have flexibility. You should have say over creating the final product. You should not, it should not be demanded that you show up to 10 team meetings a week and, you're not being paid for those and you haven't agreed to it. That's more of an employee situation. As a contractor, you can negotiate that and say, yes, this is included in my hourly rate, or this is included in my retainer, or I need to be paid for these extra meetings that I'm attending. And even still, that is skirting dangerously close to being treated more like an employee. So this is just a brief overview. Do educate yourself about this. Ask questions. Hire an employment lawyer if you need to. Discuss things with your accountant as it relates to withholding and setting aside money for taxes and your business structure and things like that. But this is a really important decision as you decide to, go forward. Because one is essentially running a business and one is really being an employee. And you might have a mix of both, or you might have multiple clients as an independent contractor. So the choice is up to you, but just be well aware of what that means for your situation when you step into either one.